The quarterly results are just out from Walmart. Courtney Reagan is here, and she has more on that front. Hi, Court.
Hi, good morning, Becky. Okay, there's a little bit of nuance in this one, so hang with me. So Walmart putting up earnings of 68 cents adjusted. That's unclear if it's comparable to analyst estimates or some legal charges in here. Revenues, though, are stronger than expected, $177.4 billion. The street was looking for $176.16. Now, operating income is coming in at a negative 8% in the U.S. because of insurance, legal, and restructuring charges. So Walmart self-insures for costs and liabilities for things like worker compensation claims. So it was $450 million this quarter. That's 560 basis points to operating income, or 4 to 5 cents of earnings. Without it, the company says operating income margin would have been about 6%. That's more of what we expect from them. Now, Walmart is increasing its full year guidance for sales and adjusted earnings. Walmart's U.S. same-store sales growth streak continues. 45 straight quarters of growth, comps up 4.6%. Analysts were looking for that to grow 4%. Grocery, health, and wellness, those are the categories that led the way. U.S. inventory up, but just 2.2%. Digital sales grew 26% in the U.S., and profitability there doubled. Now, the first time the retailer reported profitability was actually last quarter for that digital business. So that's something to note that it doubled already. Advertising up 31% in the United States. I spoke with Walmart CFO John David Rainey, who said, quote, there are certainly areas where we have fully absorbed the impact of higher tariff costs. There are other areas where we've had to pass some of those costs along. At these tariff impact costs, our costs will continue to drift upwards. We try to be aggressive here on price and minimize the impact for consumers. We've had 7,400 price rollbacks in the most recent quarter. That's an increase of 2,000 from the prior period. Now, on the consumer, Rainey said, quote, they continue to be very resilient. Private brand penetration in the U.S. business pretty flat. They continue to be choiceful, they being consumers looking for value. And Rainey called out some new strength in general merchandise, particularly a few areas like apparel fashion that really shined for us. In fact, we saw an acceleration in that category as we went throughout the quarter, which suggested to me maybe that's part of the Target share that Walmart picked up.
Yeah,
it's fashion particularly.
Right. You have to look at all of those moving pieces. So I guess just getting back to the one-off legal costs, what happened that it was such a big unexpected cost?
How this has been explained to me is that in general, retailers or other companies have to sort of hold aside reserves.
Yeah, I understand that, but was there one big event or something?
There was not one big event. They just said that it's sort of a catch-up. It's sort of a catch-up cost. Amazon, Kroger, Target, FedEx, Dollar Tree, they've all done this in recent years, in recent quarters. And they do have to disclose it because it's usually material. Walmart, it's just been a while, frankly, since they sort of upped those reserves. And they said, importantly, incidents actually haven't increased.
Okay.
But each time that there is a potential settlement or even a litigation sort of decision,
they have to put the funds in for it.
They have to put the funds in, and each time it's gone up. So the incidents are lower, but the amount that's paid out has gone higher.
Is the boost in sales expectations because prices are they going to charge more?
Well, so what they're saying is again, like they always do this portfolio approach, right? So some prices are going to go up, some prices are going to go down. They do it on a per item basis. So they pointed out the rollbacks.
If prices went up because of tariffs, you'd have higher sales.
Are they eating it with their margins? Oh, I see what you're saying.
No,
yeah, prices going
right.
Just prices,
but if they're holding the line
more.
on, if they're holding the line on prices,
right.
and not passing those costs on.
They said they're going to have to raise it. And choiceful, choiceful is like the most antiquated, obsolete word.
I think the biggest question is,
you know who uses it? Retailers.
All
they use
them.
it.
Every one of them.
They do.
They
brought it back to mean
they
selective.
All use it. But to your point, I mean, some prices are higher, some prices are lower.
What did they say about their margins? It sounded to me like what you were saying is that they're going to eat it in the margins to try and make sure they don't lose market share.
And that's exactly, and that's what they're trying to do, and that's what they did this quarter. And when we talked earlier this week about that RIM accounting and how when they eat it in costs and don't pass it along in price, because cost sits on the top of that ratio that is used in accounting, it can prop up profitability more than is actual. But what John David Rainey said is it didn't happen to the extent that they had warned us about. It could happen in continuing quarters as costs from tariffs continue to go up. But so far, they've managed through that, meaning the profit
and they
that
don't
we're
see
seeing
it
here
happening
is
at this
actual.
point. Right, and they don't see it happening at this point. They've got pretty good idea,
pretty good idea
for a while.
Assuming that things stay where they are, right? China, we're still in this negotiated period, right? And so who knows if that goes up higher or if other things change. But as things stand right now, to your point, yes, it looks like they have a good runway, enough so that they increase those earnings expectations.
People were looking at this report as the one that was going to be a real clear and easy and simple one that would tell us a lot about the consumer. What can you say about the health of the consumer based on what you see?
It's so funny. I mean, we talked to John David about it, and he's like, this is so boring. I feel like you never get a great answer from me on this. But really, we haven't seen it change. We understand there's this fear and there's this confidence. I even said, you know, when you look at your online data, are you seeing people searching more when it comes to price comparisons or searching for private label? Or
did they see an increase in sales, though, on a month-by-month basis like we saw with Home Depot and some of the, and I think Target, too. I think both of them
saw that is a good question, and we actually didn't get that far. We only had about 10 minutes.
So we'll hear that on the call coming up.
We should hear that on the call. But Target saw that, Home Depot and Lowe's. July was really strong. And remember, July was also that period where we have those the Prime Day events and then the competing events with them. Now, to be fair, that's a year-over-year comparison anyways, because we had it last July, too. But if consumers are being, particularly conscious of prices, maybe they use those opportunities to stock up. So that's what we're trying to tease out there, too.